that's technical analysis, just basically looking at a chart and analyzing it and using a variety of variables, time, volume, or price action, and mashing that all together and coming up with different ideas. That's just technical analysis. Trading is very different. Trading is where the rubber meets the road. And most people, I think, are recognizing once they dip their toe in the water, it's technical analysis is not going to save them.
Welcome back to the Episode Down with Andrew Menaker once again, one of the great psychologists that I really admire and listen to for trading psychology stuff, and someone who's really able to explain the mindset, help people kind of transition to getting the right mindset in trading. So Andrew, welcome to the podcast again. Good to have you here. How's it going today?
Thanks, Etienne. Thanks for inviting me back. Yeah.
Awesome. Good to have you here. Of course, it's been a while. We spoke, well, not too long ago. So I kind of want to go back and some topic we discussed last time, some new things we can talk about. But tell me a bit more about kind of what's new for you these days. What's been happening in the past few, years since we last spoke?
Well, so much has happened. I've been very, very busy. I just seem to get busier and busier. Since 2023, I think the market has been very surprising for a lot of people. And what happens in markets that go up and people don't expect it to go up or goes up further than people expect it to go, my inbox fills up with inquiries, which is what's happened here. It happens all the time. This is just the cycle that we're in right now. So
yeah, we had a talk about whether it was more when people lose money, they feel they have to reach out to like a psychology expert or someone to help them with the psychology aspect. But it's also when they kind of see a big move in the market, they feel like they're missing out on it and they want to make money also. So they reach out to you for that. So it's interesting to hear that perspective.
Exactly. People are either not positioned properly or the FOMO, both. People feel as though they're not making the money that they want to be making in this kind of market. So, yeah.
So tell me, there seems to be a very big kind of focus for traders who are struggling or those who want to get profitable, especially the retail traders mostly, on trying to win often. They want to win most of the trades or be able to have profits more often. How do you kind of reframe that too? Because you don't necessarily win a lot in trading. You might win less often, but still make money anyway. So how do you kind of train yourself to lose more and more over time?
Exactly. Yeah, that high win rate is very deceptive. I mean, the more important stat is the average size of your winner versus the average size of your loser. Much more important stat. And another related stat to that is what's the average hold time for a winning trade and the average hold time for a losing trade. Those are the kinds of stats you should be paying more attention to than your win rate. That'll determine your equity curve right there, much more than your win rate. You can have a high win rate and still be a net losing trader, or a low win rate and be positive. To answer your question though, Etienne, about what do you do? There's a lot of things. I mean, the big thing is we have to let go of the emotional connection and the ego connection to the outcomes, right? People let the money and the P&L define them, who they are as a person. We have to work to get beyond that and not let our trading define us as who we are as a person.
That's a very good point. Now, I'm very curious to hear you mention the duration of your winning and losing. How do you use that? Because I tried to play around with this a few years back. I kind of got something out of it, but maybe more of a data-driven analysis there. But how do you use that stats to guide the decision in trading?
Yeah, well, the classic mistake that many people make is they hold on to a loser for too long, or they keep adding to the loser, and eventually, sometimes, right, it comes back to break even or even a profit. And in those types of trades, usually, if you go back and look at them, generally, they have longer hold times. And so you'll see people who have, I call that type of a trade an impulse trade or a low quality, a bad process trade that results in a profit. I call it a type 4 trade. There's 4 types. We can talk about that later. And as someone who has a lot of type 4 trades, you'll often also see a pretty high number for their average hold time of losers versus the winners. It's one of the clues right there.
And the next thing you mentioned is trying to detach your self-worth from your trade's P&L, whether it's losing or winning. How do you work on that? Because that might feel tough for a lot of people where they feel this hype when they win, they feel this depression when they lose, and they want to kind of be able to stay more neutral. How can you achieve that?
So staying perfectly neutral all the time is impossible, but it is something we want to try and aim for. And there's a lot of things that we have to deal with, right? There's at the very basic physiological, neurobiological level, there's dopamine spikes that happen, right? You see some money lands in your account, but on an impulse trade, you get paid for it. Or just clicking the button to get into a trade. You get a dopamine spike, feels good, you want to do it again. So we have to be able to not be driven by that, as well as our need for approval from others, how we are seen by our family, our friends, our community, neighbors, other traders, whatever your world is, that need to be competent and to be seen as good enough and successful. And so that really puts a lot on our self-worth in terms of how we perceive our self-worth. So separating the outcomes, what we have to do is we have to separate the trade outcome, whether I made money, lost money, separate that from the process that led to the outcome. And it's really important to separate and think differently about your process versus the outcomes. That's one of the primary ways, and it takes a lot of work, takes time to do that. There's a lot of techniques and methods to do that. But the more you do that, the more you can kind of detach your self-worth and your ego from the outcomes.
And the thing is very similar to how, let's say, a politician will do things. Like politicians have made decisions, maybe they have like a lot of criticism, a lot of backlash, like very bad comments. They got to be able to detach themselves from that. I guess the same thing applies to trading in a different way.
Yeah. I mean, we come to trading to make money, obviously, right? Financial freedom, that's the attraction. The problem is that there's so much responsibility that comes with that freedom. And I like to look at the word responsibility. You can divide it into two words, response and ability. What's your ability to respond? How do you how do you respond to FOMO? FOMO is a regularly occurring emotion. It's an emotion, it's a feeling, happens all the time. And so that's a good example. How do you respond to the FOMO? You're going to have FOMO. You're not going to eliminate it. Everyone has it, from the world's greatest traders to people who are not doing well, and everyone in between experiences the same FOMO. It's how you respond to it. And do you have techniques and methods for yourself to help you to not do something that's, not in your best interest, that you're going to regret later? And then tying it also to your self-worth. Do you feel like you have to make money every day? That's the other thing I'll just share with you briefly, is that I think one of the worst things that people do, and it's often talked about in trading education, and I'm very anti it, which is having a financial goal, making a certain amount of money each day. I think that's horrible. I think it sets people up on the wrong path for trading. It forces people to have to trade more, put on impulse trades. They're shooting for a number. I can't tell you, Etienne, how many emails I've received from people over the years who tell me, I was this close to getting to my goal and I put on one more trade and then I lost it all. It's your goal should be, how many am I making is my process of high quality each day? That should be the goal. And the outcomes, the profits, will take care of themselves. That's the byproduct.
Yeah, we're definitely on the same page on this one for sure. It's something that
we all have. Yeah.
So tell me about the personality for trading. Are there personalities that are better suited for trading? And are there maybe some personality aspect or traits that are kind of tougher to work with in trading?
Well, I'll be a little comedic here, but it's true. The best personality for trading is one that you don't want. And I do come across it every now and again. And it's a psychopath, a true psychopath. They actually make very good natural traders because they don't experience emotions the same way. They don't experience regret. Problem is they have a lot of other problems. They make money, but they have a lot of other issues. I've worked with some of them in my coaching practice. But besides a psychopath, the other types of, there's not really a set personality. There's certain factors, right, that are going to be more conducive to successful trading. And I'm going to mention a few of them, and I'll just say this: if you don't think you have these factors, people that are listening to me, it's okay. You can develop them to some degree. One of them is resilience, right? How stressed out, how reactive emotionally and behaviorally do you get when you're missing out, or when you take your stop and then it turns around and goes in your direction, or whatever the frustration might be? How resilient are you? So resilience is a huge factor. Open-mindedness, another one. How adaptive are you to changes? And one of the things you can do for that is continually use questions for yourself, rather than having Post-it notes all around saying, be patient, don't be greedy, follow your plan, and all these, what I call marching orders, or self-admonitions. What's way more helpful than that is to have a pen and paper and ask yourself, what am I feeling? Why am I feeling this way? What is this feeling tempting me to do? Is that consistent with my plan? That's a much more powerful type of thing than having a post-it note saying, follow your plan, don't be greedy, be patient. Doesn't work.
Good point. What about these personality traits that are sort of hurting your trading that you might want to get rid of?
I mean, some people are just naturally more impatient than others, right? And so you can't necessarily completely change your personality, but you can learn how to be more patient, because that is an important trait in trading. So like mindfulness meditation on a regular basis is one way to cultivate patience. You generally want to, the way I look at it is patience is work. A lot of people think sitting and waiting for the trade to set up or the level to come in and for them to actually enter, they feel as though they're not doing anything. They're just waiting, and waiting doesn't feel productive for most people, right? Especially in Western cultures, right? Waiting is we're taught to be doing things, do stuff. Waiting is you're being lazy or unproductive. Waiting for a trader is actually the work. That is the work. It's very hard work. You don't get a dopamine spike when you're waiting. It's really hard.
I got a discussion on, I believe, YouTube a few weeks back, which is how do you train yourself to hold to trades? Like people who are closing their trades too early before they even hit profit, they want to kind of be able to get out for a quick win, but they should be probably better off holding it for a longer time. How do you train yourself to hold these trades?
Yeah, the managing a winning trade, man, it's such a dilemma, because if you think about it, what do? You get out here and you see it go on to your main target without you, and then you regret that? Or do you hold it, hoping it does get to your main target, and then it doesn't, and then you regret that? So you're going to regret something in pretty much every winning trade. Pardon me. So what you have to do is recognize that which form of regret am I willing to tolerate, right? You have to actually ask yourself that and predict for yourself how it's going to feel that type of regret, and which regret would you rather choose in this particular trade. Personally, what I also do is I do a lot of scaling out, and I would rather, this is just my own personal way of dealing with it, is I'd much rather be scaling out, and when if it does get to my main target and I don't have a full position on, that's okay. I can handle that regret. To me, that's not as bad as the regret of, the other side of the coin. So
it's a good point. It's about finding what works best for you and what kind of process you're willing to go through.
Yeah, and everyone's going to be a little different. I wouldn't let anyone tell you what to do. Like some people have been told, you have to use a trailing stop, or you have to do this. It's different for different people and different personalities, different types of trading. The other thing I'll say is this: you can't trade like anyone else. You have to discover who you are as a trader, and then become the best version of you, using your own strengths, right, and being aware of your weaknesses. And that's going to be different for each person.
Yeah, definitely. I've been talking about for roughly 2 years now, like very more intensively than before, because I think people are too focused on like copying a strategy they found online, or going on YouTube, finding something that they want to trade and then copying it. But the results of this is just bad. They don't get results with it. So how do you go about kind of creating a strategy that matches your strengths and weaknesses? Is there like a process to go through, or how do you make this work? Because it might seem like a big task for some people.
Yeah, I mean, there can be. I mean, some people, the first thing you want to do is you want to just spend, if you're relatively new to the market, you want to spend time looking at the market through different time frames and different markets and different instruments, for that matter, and understand the differences. I mean, some instruments are way more leveraged, right? Futures and options versus stock. And if someone is not a good risk manager, they just tend to be impulsive, and they tend to be an aggressive person. Probably starting off with a highly leveraged instrument is not the best way to go until you learn to be more of a risk manager. So yeah, there's a lot of considerations.
Do you feel like trading psychology is becoming more important for traders? Like it feels like a few years back, no one talked about it very much, and then now it's like so popular. Like or better on the channel, they have the most views on psychology and topics of the sort. Like when you come in on the channel, do you feel like people are more interested into it, or is there like a bigger need for it?
From my perspective, it seems like there's always been a strong need for it. Perhaps more people are talking about it openly, and That could be it. I don't really know. I think part of it is also many more people have gotten involved in trading, right, since the pandemic, and people are working from home, and so there's a lot of folks that have tried their hand at trading, and I think they recognize that it's not simply about technical analysis. And what I often will tell people is, don't confuse technical analysis with actual trading. It's very different. Trading is really about risk management. How much money are you willing to spend to find out if your idea works or not, right? That's technical analysis, just basically looking at a chart and analyzing it and using a variety of, variables, time, volume, or price action, and mashing that all together and coming up with different ideas. That's just technical analysis. Trading is very different. Trading is where the rubber meets the road. And most people, I think, are recognizing once they dip their toe in the water, it's technical analysis is not going to save them.
Do you ever meet traders who don't believe in trading psychology? Like I've seen people who might be profitable, but they just don't believe in psychology at all. They think it's like a waste of time for them to work on that.
Well, first of all, I would question, are they actually profitable or not? That's be the first question. A lot of BS out there. The other thing is they probably are using trading psychology and not realizing it. They may not call it that. They probably they've probably figured out some things for themselves. They might also be a psychopath, perhaps. There are some of those out there, and I do come across them. So I would say I can't put all of those folks that you just described into one bucket. There's a lot of variety there.
For people who've been trading for a while, I know we always talk about this topic, but it's interesting. People who've been trading for a while are losing money. Where can they kind of figure out what they need to work on because of the mindset? Do they because if you pick up a book is tough, I think there's a lot more like self-analysis you can do to figure this out. Where do you want them to kind of start, or what should they do first?
Yeah, there's so many different places to start, and it's not about one particular way is better than all the other ways, but a few considerations, right, is let's say you start off as a sim trader, not a bad place to start. You're not going to be able to become a good trader trading sim because there's no real consequences. But if you are starting off on sim and you're practicing on a sim, then what you want to do is start categorizing and sorting your trades, as we talked about in the past, type 1, type 2, type 3, type 4 trades, which I can describe here in a second. And then based upon how many you have in those categories, can really tell you what you need to work on for yourself as a trader. Type 1 trade is good process, followed your plan, did what you're supposed to do, was a winner. Type 2, good process, followed your plan. Your stop got hit. It's a bummer, but it's part of the business. Type 3, good process, followed your plan, and you lost money. Type 4, poor process, poor quality, often an impulse trade, and you make money, or you're averaging the loser and you hold it long enough and it comes back. If you have a lot of type 4 trades, for instance, that's a very different kind of a person, or I should say, that person needs to work on things that are going to be different than someone who has not as many type 4 trades, for instance. So that's one way to look at it. There's a lot of ways. There's a lot of places to start. A lot of ways to develop as a trader. There's no one particular path that you have to take. I've seen people do it in a lot of different ways. The main thing is you want to pay attention to yourself. I call it the inner market. We're not just trading the market on the screen. There's our own supply and demand, our own support and resistance, how we feel about ourselves and our money and our own financial situation and how people see us. And that's what I call the inner market. And so learning about your inner market as you learn about the market itself. And even as you learn about your inner market, you're probably going to start to recognize that there are certain markets that you might be more attracted to, that might be a better fit for you as well. So,
yeah, this type of trade is something I've been using for years now, and I believe it comes from you also. When we first started together, like multiple years ago. But so when I share this with people, the main issue I see is like they put too many trades in the good process, but they're actually bad process. Like there might be wins, and because they're wins, I think the good process. They put them like the first category, but then they have to move them, be honest with themselves, and move them somewhere else.
Exactly. I mean, the big trap that we fall into in trading, it's really easy to fall into, regardless of how smart or even experienced you are, is just because you made money, you cannot think automatically that it was a good trade, right? we conflate this idea of profit means good decision. I'm glad I did that. Not necessarily, right? And likewise, the vice versa is also true. Just because you lost money doesn't mean it was a bad decision. It might have been the right trade to take, right? But you didn't know. There's no way to know where the market was going to go, where price was going to go, and your stop got hit. There's no way to know that beforehand. But people say, oh, it was a bad trade. I shouldn't have taken that trade. And they get frustrated and they look for a revenge trade to make their money back, right? Because they're really angry.
You mentioned the inner market and the types of markets you might be better at trading. Are there any sort of guidelines or principles you see with different market, different personalities, like what works best for some people?
It's really, I'd say I've seen so many different possibilities, so many different things, Etienne, that I can't say there's any really specific trends. I mean, the easy one I'll say is this: is that if you're working in a job, right, and from home, and you're trying to also trade, it may not be a good idea to be a kind of super short-term scalping in and out trader, right? You're going to be distracted. So depending upon the lifestyle and what you have going on in your life, that's going to be, a big determination. Same with market hours and what part of the world you're in and your lifestyle. There's a lot of considerations, a lot of factors, your health, age, a lot of things.
Some people will think that your personality dictates the market or the trading style you should have. Like you should do a swing or intraday or so on. Do you feel like this is something you can adjust? Like you can change to your different style given your personality, or should you stick to what you're already sort of good at with your own personality?
It's a good question. I can see it going both ways. I mean, if you're good at something, then my first piece of advice would be to do more of what works, right? Just to keep doing more of what works. If for some reason that's not a good fit for you because of the time factor, the time frame, or it's getting in the way of your life or something else, then you'll have to work to develop into a different type of a trader, right? But the first piece of advice really is if you're doing something that's truly working, not impulse trades that are paying off, but if you have a process and you're making money, keep doing it and do more of it. Increase your size.
I see this a lot where traders are doing so different strategies, so many different things, and because of it, they're losing money. But if they actually stuck to the one strategy or the one thing that they use that work well, they could be making money. So it's kind of an interesting principle. They try to overdo it, sort of.
Exactly. I was working with this one trader last year, a retail trader. So I work mostly with professionals. And, he had this one particular trade that would work a lot, but it wouldn't show up very often. And so while he was waiting, right, he'd be putting on all these other trades that were not good. And as a result, he was net negative P&L wise. But if he had just would wait, doing what I call the work, which is waiting for his trade to show up, he would have been actually nicely profitable. So it was all about that, feeling bored, feeling impatient. I'm not being productive. I need to make more. As opposed to just maybe increasing his size on his trades that were working.
Do you see a trend in how people are being patient? Is it, I know some people who are going to leave trading, go play video games until they see their trades. I know some people who are going to do other stuff. What can you do to be more patient? Is it a good way to kind of avoid the market, go do something else? Or should you train yourself to set the screen and be patient?
Chaining yourself to the chair and locking yourself down and staring at the screen is not going to be good for a lot of different reasons. Willpower fatigue and just cognitive load, a lot of different reasons. But you want to take breaks. And this is the hardest thing for a trader to do, right? Ask a trader to take a break and they're going to look at you like, you mean I'm going to have to miss out on something that might happen while I'm away from the screen? Yeah, actually. And that's okay because markets continuously create new opportunities. But the idea is, like I had this one client several years ago, he was exhausted at the end of the day trading. And he was really, we can easily see, and this is a common pattern, as the day wears on, the quality of your decision-making will go down for most traders. A lot of traders can make some money in the first part of the day. And by the end of the day, they give it all back plus more. So what this trader would do with this client of mine years ago, as we talked about it, is that he would just go to the gym and go lift weights middle of the day and then come back and have a second shift. Or not even have the second shift, just end early, which is really hard to do for most traders because you feel as though I could be making more. The dopamine feels good. The money looks nice in my account. I want more. I want to make the money back. You're thinking about what you've lost over the past however much time you've been trading, or a certain goal you're getting closer to. There's a lot of reasons why it's hard to tear yourself away from the screen, but it is absolutely critical to not be in front of the screen all the time.
You feel like someone who swing trades, you feel that the days of the week could affect your performance also? Let's say like Monday you'll be maybe more prepared, and by Friday you're more like taking trades kind of close the week on a good note.
Yeah. I mean, I know like personally for me, oftentimes Fridays are my worst day. And I know a lot of traders are like that for a lot of different reasons. But yeah, you're right. I mean, it's different for different people. Like Monday mornings can be a little tenuous and tricky. Market's kind of sorting itself out, digesting news over the weekend, right? And then, of course, after a big data release, right, big news event, something like that. So, yeah, there's a lot of patterns to pay attention to, and some people are going to be really lousy, and some people are going to be better in those types of situations. And you got to be honest with yourself and recognize who are you as a trader and what are your strengths and weaknesses.
I know we talked a little bit about tracking your trades and the types of trade, but I want to go a bit more in depth on journaling. How do you kind of keep track of your trades for kind of getting the most out of it? Because you want to, of course, be able to use your journal, kind of find takeaways or like lessons from it. So how do you do that to make sure you can get something out of it?
So what you're referring to is like journaling after the fact, like what did I do?
Yeah, after the fact.
Because there's another type of journaling that I talk about with my clients, which is more like live journaling in the moment. But let's talk about the post-trade journaling that you're asking about. The critical thing right there is sorting the trade. You got to tag it as a type 1, type 2, type 3, or type 4 trade. And then at the end of the day, you go back and you look at what you did. The next morning, you go back and you read, what did you do? What kind of trades did you do yesterday? How did you get to that P&L, red or green number? What was the process like getting there? What were you thinking and feeling before, during, and after each trade? That's another great piece of information to include in the journal, right? Because you'll start to see patterns within yourself, in your own emotions, in your own behavior. We're humans and we have patterns. The market has patterns as well. And we're not just trading the patterns on the screen. It's those patterns inside of us, that inner market I was referring to earlier. So the journaling, a big part of that is learning about your patterns, right? What kind of trades did you have? Honestly, just because you made money, was it a really good trade or not? You got to journal about that at the end of the day. So you can, and then go back and read it the next morning. Big mistake people make is they don't go back and read their journal entries. Best time to do it is the next morning.
It's a very good point. And I love to go back through my list of like bad process trades, either winning or losing, because then I can learn something and like get something away from it. Every time I go back to it, which is usually like once a month for me, because I don't take too many trades, but I always get something out of it, and then I can readjust and like find ways to do it better. So
yeah, and I'm a big proponent of handwriting, pen on paper rather than keyboarding it. I mean, I've got sloppy writing, and it's hard to read my own writing sometimes, and it's nice to organize it and archive it and store it when we keyboard it on the computer. There's a lot of research, just plus my own just experience personally as a trader and working as a coach, that when we write with a pen, we're more involved and engaged and committed to what we're writing. We're more involved with it. We're going to remember it more. So I would just say, even if you want to keep track of your trades on your computer on a spreadsheet, that's fine. Keep doing that. But I'm just suggesting that you also want to have a pen and paper journal as well.
Tell me about then the pre-trade journaling, because that intrigues me a little bit. So people who are either doing it too fast, or they're skipping trades, and that this
can be difficult. Yeah, I mean, so if someone's like a true scalper, which I'll just say this, honestly, I don't think there's that many successful true scalpers these days anymore. There's a few, but not many. It's become harder and harder because you're fighting against machines and algos more and more, and they're going to be faster than you. So, but if you're someone who's, if you got a couple of minutes or even a moment or two, put the pen in your hand and ask yourself, what am I feeling? Am I feeling like antsy, like it's going to go without me? I want to jump on it now. Is that what I'm feeling? Why am I feeling that way? Putting those feelings into words on paper is a very powerful way to manage your feelings, to manage your emotions. This is why that pre-trade, or I call it pressure point journaling, when you're in the pressure point, when you're in the crosshairs, when you're feeling the stress, that's the time to be doing this type of journaling, asking yourself, what do you feel? Why are you feeling it? What is it tempting you to do? What do I usually do when I feel this way? How does that work out for me? Do I want to really do that again? Those types of things. That's now, if you can't do it, if you're, a real scalper and you can't take your eyes off the screen, which again, I think it's really hard to succeed at that game anymore. Not many out there doing it successfully. But if that's who you are, then if you can't do the pen on the paper, then at least out loud verbalize these questions to yourself so you can hear your voice, and maybe even see yourself on a mirror or in a camera, see your face as you're asking yourself the questions. It's not as powerful, not nearly as powerful as putting it on paper, but it's better than just doing it in your head. And it's certainly better than not doing it at all.
It's interesting for scalpers. I never thought about doing it on video or out loud. I'm not scalping, but yeah.
Before everyone had webcams, you could just hold up, a hand mirror, right? A little cosmetic, my wife's mirror in the bathroom, go out of the door and pull it out. I used to have that on my desk 20 years ago. Could see myself and talk to myself.
Oh, interesting. Yeah, it's definitely good to do it. And it kind of helps to, stay honest with yourself. So not just that quick moment of reflection could make you not take the trade because you know it's a bad trade anyway.
Yeah, that's all it takes, right? Is that little moment of clarity, a little epiphany, a little extra self-awareness. Like, oh yeah, this is me jumping the gun again, chasing, or don't want to wait. Do I really want to do that again? Yeah, I think I'll wait. If it goes, it's going to go without me. Boy, that's a wonderful moment of clarity to have.
For sure. We've got a lot of good takeaways in this interview so far, but anything we didn't focus on or talk about you want to mention or add here?
Well, I'll just say a lot of people talk about trading psychology being important. And of course, I believe it is. And if you are someone who believes it's important, you need to do something about it for yourself. And I'll just say that reading about it is good. Watching interviews, listening to interviews is good. But you need to probably go more than that, because that's all passive. Reading and listening and watching is passive. You want to engage with it. So at the bare minimum, have a journal for yourself that's sitting right by your keyboard, right? That's going to be more important than having the Post-it note that tells you, be patient or don't be greedy. And then I'll just say that, what's an interesting trend for me, it's been going on now for several years, and it continues this way, is that more and more of my coaching practice is professional traders, less and less individual self-directed retail traders. And I think partly because although they may understand that trading psychology is important, they just, for a lot of different reasons, don't commit to actually do anything about it. Their job's not on the line. Someone who's trading on a bank desk or at a hedge fund or family office or something, their job depends on it. It's a whole different thing, and they're going to do what it takes to take care of the issue, or at least try to.
What do you think is the difference between the retail traders who work with you, let's say, then they implemented and get good results with the psychology that they've implemented, or the people who take maybe the same coaching and program but then don't do anything with it? What do you think is a factor there?
Yeah, I mean, one of the big factors, a couple of big factors, is one is what kind of EQ, emotional intelligence, emotional awareness, do they come into the game? Do they come into coaching with? Or, some people come in at a very low level, and it's hard to, it can be hard for some people to develop that. And if it's really hard to develop that, it's going to be hard for you to actually get your arms around trading psychology. That's a really big one. Another one is just being honest with yourself. So a lot of people that like to kind of be in denial, right? They believe that the impulse trade that made them money was a good trade. Well, you have to be honest with yourself, and you have to recognize that was a really lousy trade. That was like the worst thing you could actually do for yourself. Yeah, it made you money, but it's going to hold you back. You'll never succeed if you keep doing those trades. So self-honesty and emotional intelligence, emotional awareness are two of the really big factors that kind of determine the outcome of what someone will get out of, trading psychology and that kind of thing. And it's different. I'm speaking in broad generalities, of course. There's a lot of variations, but those are a couple of considerations, big ones.
A lot of people too, and this is what I've observed over the years, that when they have a tough run, like when they lose money, then they feel like they need psychology or they need a coach to help them. But then the second they have like a good week, then they feel they're out of it and they're good.
Oh, I know. Yeah, exactly. And they ping pong back and forth, which is what I do is I when I take on a new coaching client, my professionals, I mean, I've known some guys for 10, 15 years that I've worked with off and on, not the whole way through, but there'll be gaps, a year or two where I don't hear from them because they're doing fine, or 6 months, and then they get back in touch with me. Whereas independent retail traders, in the very beginning, what I would do, I would work with them session by session, and oftentimes what you just described what happened. They do okay for a week or two. Bye. They don't want to see you again. All of a sudden, 2 months later, I'm desperate. I need some sessions. And they don't realize that there's a developmental arc that has to happen. There's a foundation, a psychological foundation in terms of being able to tolerate the discomfort of FOMO, the discomfort of a loss. Being able to develop that takes time. It's not a one-time thing. You have to keep working on it and develop it.
Yeah, this is where if people are serious about it and will want to really work on it and will do the work, then that's where you're there to help them. So that's awesome.
Yeah, that's what I do. I enjoy my work quite a bit. Yeah.
So where can the people find you or connect with you if they want to reach out or see what you're doing or even work with you after this interview?
Best way is through my website, andrewmenaker.com, on the contact page. They can email me there or even message me on Twitter if they'd like. I've not been active on Twitter lately, only because I've had a wait list in my coaching practice, but I am talking to people who are interested in getting on the wait list. So yeah, through my website, andrewmenaker.com.
Yeah, you want to check up the training psychologists out there who's really doing good work and who I really admire for dedication and kind of helping people with like tactical advice and things they can implement. A lot of people are not so focused on like the tactical advice or the tips and things people can do to become better. So it's a good thing. I recommend people reach out to you for sure. And we'll leave the link below the description of the video here. I appreciate your advice as always, Andrew. I hope we can catch up pretty soon and discuss more.
Sounds good, Etienne. Thank you.